Hello and welcome to the look ahead for Thursday, the 17th of October, with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching for jobs data from Australia. In the European session, we've got the ECB interest rate decision. Over in the US, we'll be watching for US retail sales and jobless claims, and also IEA oil inventories. And after the close tomorrow in the US, we'll have earnings from Netflix. Now, let's just kick off with Netflix. Expectations are for EPS to rise to $5.16, up from $3.73 the same period a year earlier. Revenue is expected to come in at 9.77 billion, up from 8.54 billion in Q3 2023. So we're expecting really solid numbers from Netflix, which should solidify its position at the top of the streaming sector. We've seen strong content from Netflix with the likes of Bridgerton, season 2 of Squid Games. And basically, we will also be expecting or watching to see whether we see price rises from Netflix. Now, if we just think as far as the US is concerned, they haven't seen the standard account hasn't seen a price rise since January 2022. So it's been quite a while. So it's probably on the cards, and given the strong content that we've seen from Netflix recently, that could be a good time to do so. Now, interestingly, subscriber numbers used to be very much the focus of Netflix earnings. We did see that subscriber numbers rose to 8.05 million in Q2. However, this quarter is going to be the penultimate quarter that subscriber figures will be released. After that, the focus is going to be very much more on revenue growth. So let's just take a look at what's going on the chart. As we come into the earnings for Netflix, we can see, this is the chart here, they are actually trading just below all-time highs. They reached all-time highs. If I just show you on the weekly chart, this is the, where's the 2020? Yeah, there's the 2021 high. So that's what we did reach. It was a level of 736. That was reached just at the beginning of October. We've seen this really steady climb higher, a series of higher highs and higher lows since November last year. The price has peaked, as I said, just coming down off that high. It's trading above the 50, 100 and 200 SMA, but I think this is a pretty key level here around that $700 level. If we get a break below that, then that will negate that near-term uptrend that we've seen. Watch out on the downside for any disappointing figures. 665 is the level on the downside to be watching. A break below that is going to create a lower low. On the upside, if we get some encouraging numbers from Netflix and the price hikes seem to go down well with investors, then we'll be watching out for a rise above that 736 all-time high towards 750 would be the next logical level on the upside. So just with what else we'll be watching tomorrow, we've got Euro US dollar, we've got the ECB interest rate decision that we've spoken about. That I mentioned earlier. The interest rate decision is expected to see the ECB cut rates by 25 basis points. That will mark the third rate cut from the ECB since they started cutting rates in June. It will take the rate to 3.25%. The rate cut comes as inflation in the region is below the ECB's 2% target level. It's down at 1.8%. We also sort of have seen some concerns around growth in the last ECB meeting. The ECB did downwardly revise its growth forecast. Data has been a little bit weaker. Obviously, just recent data from Germany, though, where we were expecting to see a contraction in GDP, has perhaps seen maybe a bottom coming in, but yeah, it's still early days as far as that's concerned. So this is the Euro US dollar. Obviously, we've also been watching some US dollar strength in recent weeks as the market has reined in rate cut or outsized rate cut expectations from the Federal Reserve. So the Fed is now expected to cut rates more gradually than initially expected, which has boosted the US dollar. In fact, yesterday we had Atlanta President Raphael Bostic saying that he only sees one 25 basis point rate cut this year remaining, and that could be in November when we're seeing the expectations around 95% for a 25 basis point rate cut. Now so the euro US dollar has formed a double top there at 112. We've fallen lower, taking out that little rising trend line, near-term trend line there. Taking out the 50 and the 100 SMA, testing the 200 SMA as we speak at 108.80. We've remained above that today. I'm guessing we're just waiting for the next catalyst, which will be the ECB interest rate decision tomorrow. Break below 108.80 if we have a dovish ECB, particularly compared to the Federal Reserve, who's sounding a little bit more cautious about cutting rates too quickly, then that could see the level down here come into play, which is 108. And then so we see the round number 108 come into play, and then you've got the low here of 107.80, which is the August low. Below that, you've got this rising trend line, which goes back to the end of 2023, which is around the 107.60 level. So they're the levels to watch for euro US dollar. The other one that we're going to be watching is the NASDAQ, as we've got US earnings coming in and Netflix is in. Let's just have a look to see what's going on here. So the NASDAQ has broken out of this symmetrical triangle that it had been trading in. It rose to a high of 20,000, just under 20,500. But we did see the price fall sharply lower yesterday. There was a lot of concerns over chip stocks following ASML's weak guidance and concerns over Nvidia and the US Biden administration putting restrictions on the chip exports. So we saw that sort of drop off in the sell-off in the NASDAQ dropped around 1% yesterday, back below the 20,000. That's basically the uptrend is still in place here. We've seen a series of higher highs here. Buyers are going to be looking to retake 20,000, retake 20,500 to bring that fresh all-time highs above 20,750. It would take a move below this level here, which is the 19,500, 19,600 to create a lower low. And in which case then we could see the sellers gain traction towards that 19,000 level. So thank you very much for joining me. I hope you've liked what you've seen. And if you would like to see more videos like this, then please do subscribe.